We are entering into another session. We are going to discuss about another source of business finance, which seems to be very familiar with something which we know. From the name itself, we can understand public deposits. Public deposits. This is a source of finance whereby it is almost doing similar things, or it is almost similar with a bank receiving deposits. But here the difference is that it is not a bank which is receiving deposits, and it is not further used for lending. When we are thinking of public deposit as a source of finance, it is received by business organization and they are using it for business purpose. We will go into detail. Public deposit. Deposits which are raised from large business organization directly from general public. As a bank receive deposits from public, when business organization is receiving deposits from general public, we call it by the name public deposits. And what is the difference between bank deposit, or why must people respond to public deposits rather than when compared to bank deposits? People will respond to public deposits when compared to bank deposits because interest rates is offered for public deposits higher than bank rates. Public deposits which is received by a company, by organization, they announce higher rate of interest than bank deposits for the deposits which they are receiving. And as banks give banks gives an acknowledgement, firms also provides an acknowledgement as a deposit receipt. A deposit receipt is given to persons who are depositing their money with the organization, and usually public deposits are received by firms for 3 years, and they will announce the interest also. And for the protection of the persons, or for making sure that persons who are investing into the organization as public deposits, RBI is regulating accepting of public deposits by business organization. So that is the general concept or aspect of public deposit. Deposits raised by organizations directly from general public. Now coming on to the benefits, it's very simple. Merits. Procedure is simple and does not contain any restrictive conditions. It is not complicated. Just those who are ready, they have to fill the form and they can deposit it with the organization. And it doesn't have any restrict condition from the part of organization. For organization, when people are depositing their money, they are not putting any restrictions. Organization is free to use it for any purposes. But when we are taking a loan, there can be restrictive agreements. It can be used for this. There can be conditions set. Here there is no conditions. After 3 years, they will be given interest and the principal amount back. Here, because of that reason, we can say procedure is simple. Raising of funds is simple, and it doesn't have any restrictive conditions. So that is one of the major benefits. Second one is cost of public deposit is less when compared to bank loans or loan from financial institutions. So cost of raising is comparatively less. When a firm is taking a loan from financial institution, they may have to give more of interest. But compared to that, raising of funds and giving interest to the investor, it is comparatively less. So cost of public deposit is comparatively lesser. And third one is it does not create any charge on asset. No asset is given as collateral security for deposit received or no charge is created on any asset. So, they can be used it for further borrowing purposes. And the fourth one is control of company is not diluted. That means when public deposits are being invited, company doesn't offer ownership to the persons who are investing into the company as deposits. That means they have no ownership power, ownership capacity, they have no control in the organization. So, control of company is not diluted by receiving public deposits. So, these are the benefits of public deposits. And coming on to limitations. When it's a new company which is inviting general public to deposit, they may not be willing, because when it's a new company, people may not be aware of the capacity of the company, people may not be aware of the goodwill of the company, people may not be aware of the financial standing of the company. So, they may not be ready to invest their savings as deposits to a new company. So, in that way it can be a limitation. Second one is public may not respond when needed, hence it is unreliable. It's an unreliable source, because we cannot expect general public to invest their savings whenever we are inviting them for depositing. So, public may not respond at the time as much as we want. So, we cannot expect public deposit as a very reliable source. At times it can be very success, at time people may not respond very positively. And the last one is when size of deposit is large, when size of requirement of amount is large, this may not work, because people may be coming up with what they are having. They may not be responding to the level what a company is expecting. So, when amount is large, there is all chances that this particular source may not be used or may not be working. So, we were seeing what is public deposits, we were seeing what are the limitations, what are the benefits.